Tesla is currently testing a ride-hailing platform in California with plans to launch next year. Initially, the service will include safety drivers due to state regulations, which require a period of supervised operation before transitioning to full autonomy. While California has strict rules, Texas might be more lenient, potentially allowing Tesla to operate more freely there. Even if Tesla takes longer to achieve full autonomy or obtain regulatory approval for a driverless taxi service, they can still begin with a human-driven ride-hailing model. This strategy is beneficial because Tesla vehicles already have a lower cost structure compared to typical Uber cars. Electric vehicles have significantly lower maintenance and operating costs, which gives Tesla a competitive advantage. The key question remains: when will they be able to remove the driver? Current projections suggest 2025 or 2026, with a 60-40 probability split. Following this announcement, Tesla's stock saw a strong reaction, likely due to better-than-expected earnings driven by aggressive cost reductions. The company achieved a record low cost of $35,100 per vehicle. While the market was primarily focused on these cost savings, Tesla enthusiasts and investors are more interested in the progress of autonomy and other innovations. At the recent We Robot event, Tesla provided some updates on their humanoid robot development. Although expectations were high for new details, Tesla appeared to be strategically withholding information, possibly waiting for a dedicated investor event. Historically, Tesla has taken this approach before major product launches. Tesla's software updates typically roll out to Hardware 4 vehicles first, with Hardware 3 vehicles receiving them later. The latest full self-driving update, version 12.5, follows this pattern. Tesla has been transitioning to a single-model approach for both hardware versions. The challenge lies in Hardware 3's limitations in power and memory, which require modifications to ensure backward compatibility. Elon Musk has suggested that if these modifications prove insufficient, Tesla might offer a hardware upgrade for existing vehicles. Since early Tesla models were designed with upgradable inference chips, this transition is feasible. Tesla currently has approximately 6 million cars globally equipped with Hardware 3 and Hardware 4, roughly split 50-50. The company is prioritizing Hardware 4 for new developments, but aims to support Hardware 3 vehicles as well. Regarding market opportunity, Uber and Lyft currently operate in a space valued at under $200 billion. However, Tesla's potential ride-hailing service could tap into a much larger market, especially if they can lower costs to below $1 per mile. In China, for example, ride-hailing prices have dropped to around 30 cents per mile, expanding the global opportunity to over $10 trillion. Predicting the exact timeline for Tesla's AI breakthroughs is difficult. While Elon Musk has been optimistic in setting targets, Tesla's transparency makes them a frequent target for scrutiny. Other automakers have also overestimated their autonomous driving timelines, with many failing to meet their original 2019 goals. However, Tesla's driver assistance system remains among the best available, with the most potential for future improvements. Unlike geofence solutions from competitors, Tesla has opted for a more ambitious approach without road-specific limitations. Alphabet recently announced a $5 billion investment in Waymo, but it remains unclear whether this funding will go toward vehicle production or other operational expenses. Scaling a fleet requires billions of dollars, as even a single city deployment could necessitate over 10,000 cars. Waymo also faces challenges with remote operator intervention, which remains costly and labor-intensive. Tesla also confirmed that it is working on full self-driving for the semi-truck, adding another layer of excitement for investors. Musk even revisited the idea of flying cars, though his current focus remains on more immediate projects. The economic potential of Tesla's robotaxi network is immense. By 2029, over 90% of Tesla's enterprise value could come from autonomous ride-hailing. This shift would transform Tesla's business model from one-time vehicle sales to a recurring revenue stream with high margins. Unlike traditional vehicle sales, robotaxis could generate continuous income, significantly increasing Tesla's profitability. Tesla's existing fleet can already be converted into robotaxis, meaning they don't have to wait for the next generation vehicle to begin operations. The company has also taken strategic steps, such as preventing customers from purchasing Model 3 vehicles after their leases expire, likely to retain these cars for their ride-hailing network. While some believe China leads in autonomous vehicle testing, the U.S. has been surprisingly lenient, with state-level regulations allowing companies like Tesla to accumulate over 1 billion miles of full self-driving data. This extensive dataset gives Tesla a significant advantage in AI training and deployment. Tesla's robotaxi model could function similarly to Uber, but with a key difference. Tesla would own the network and vehicles, enabling them to capture a larger share of revenue. Their lower cost structure allows them to price competitively while maintaining high margins. As the first company to scale robotaxis effectively, Tesla has a massive first-mover advantage. Tesla remains years ahead of competitors in both autonomy and EV technology. While competition is increasing, this only validates the market's potential. ARK Invest has projected a potential Tesla stock price of $4,000, primarily driven by autonomy. The global EV market is expected to grow from 1.4 million vehicles sold today to 26 million in the next 5 years, with Tesla maintaining a leading position. To scale effectively, Tesla may need to raise an additional $12 billion, which investors would likely support, given the enormous growth potential. The equity markets currently undervalue autonomy, with ARK estimating it should be worth $2 trillion today. While negative headlines could temporarily slow adoption, studies already indicate that Tesla's autopilot system improves safety. The National Highway Traffic Safety Administration, NHTSA, has independently verified this. At scale, an autonomous taxi could cost just 22 cents per mile, far cheaper than today's $2.50 per mile charged by Uber and Lyft. This cost reduction will drive widespread adoption. Tesla's robotaxi rollout is expected within 5 years, ultimately contributing to over 90% of the company's valuation. Ignoring this aspect of Tesla's business today would be a significant mistake, as it is the company's most transformative opportunity. Uber has already proven that ride-hailing demand exists, but Tesla's robotaxis will exponentially expand the market. With greater vehicle utilization and lower costs, the potential for Tesla's network is far beyond what Uber and Lyft currently offer. If Tesla executes this strategy effectively, they could dominate the autonomous transportation industry.